What up, YouTube? Salvador Brigman here, and today we're talking about whether or not real estate crowdfunding is a good investment opportunity. And I'm not gonna lie here, I might be a little bit biased. Like, obviously, I love crowdfunding. I love real estate investing, or the concept of at least involving crowdfunding in real estate investing. I think it's really transformative. I honestly think we're gonna look back on this time as being just a dramatic shift in the way that real estate is financed. So this is something I'm a little bit biased, but I'm also gonna go into whether or not this is a good fit for you, because I honestly believe this is not a good fit for everyone. And in addition, it is not a good investment opportunity for everyone. Just quite flat out, I admit that. I want you guys to have good results, but if it's not a good fit, I'm not going to recommend it for you. So first, I wanna go through some of the drawbacks of using real estate crowdfunding. So the first thing that I think it's important to recognize or point out here is that there are two different types of real estate crowdfunding. The first is Regulation A+ offers. So Regulation A+, under this type of offering, companies like Fundrise or Realty Mogul, you can actually invest as a non-accredited investor. So you can invest in one of these e-REITs on Fundrise or the Mogul REIT. And that investment is open to everyone. That is open to the public. Like, anyone can do that. And particularly on Fundrise, you can invest in a few different opportunities, whether it's their West Coast e-REIT, whether it's their Heartland e-REIT. There are a bunch of different ones based on the geography of the actual investment. But the downside here being that because it is a privately offered REIT, because this is not a publicly traded REIT, you actually don't get to choose the individual properties that you're going to be investing in. And also, since it's not a publicly traded REIT, it doesn't have the same degree of liquidity as a normal REIT. So that's something very important to recognize, that you're not going to be able to get out of this deal as quickly as a traditional REIT. And also, as you might think of traditional real estate crowdfunding, you're not going to choose the individual properties that are included in that investment portfolio. Fundrise is actually going to be the one to include those properties, and they're going to do all of that kind of management of the investment on that side. So that's one thing. In addition, if you're going with something that's more under the traditional real estate investment model, something like realty shares, then you are going to be able to choose the individual investments that you would like to include in your portfolio. And these could be equity style investments or fixed income, meaning debt-based investments. So you can include those, but the downside here is it is only going to be open to accredited investors. And you can take a second to look up the difference between a accredited versus a non-accredited investor. In general terms, a accredited investor is someone who is ultra high net worth. In the eyes of the government, they have the ability to basically have an investment loss of a sizable amount. So an accredited investor, they typically earn over $200,000 per year in income, or they have over $1 million net worth excluding their house. And there are also some other contingencies and other things that go into that. But that's sort of just gives you a very basic level understanding. So if you don't fall into that category of accredited investor, you can't participate in these individual investment deals as you might think of traditional real estate crowdfunding. You can't go on realty shares, but you can go on Fundrise. Now, the downsides, if you are an accredited investor going on sites like realty shares, are number one, liquidity. And this is also the one I talked about with the other type of investment. Liquidity, there are only going to be a certain number of times when you can actually cash out of that investment. Either the property is sold, either the property is acquired in some way, or if there is some point in time where the managers or realty shares offers you to redeem your shares, there might be some times when that can happen. But aside from that, there isn't a tremendous amount of liquidity when you're putting your money into one of these online real estate opportunities. So that's one thing to keep in mind. The other is, naturally there are usually higher minimums. I believe the minimum on Fundrise is about $1,000. Usually it's gonna be higher with these other accredited investment platforms. So that's another downside. And in addition, can kind of be viewed as an upside or a downside. Since you are gonna be directly investing in the real estate, you have to decide whether or not this actual individual deal, this actual individual asset is a good idea to invest in. So there's a lot more manual labor, or manual mental labor at least, picking out these individual deals, picking out the ones you want to include in your portfolio. It's far more geared towards more of an active investor versus Fundrise is more for a passive investor or someone who doesn't want to deal with all of that. They just want a fund manager to include what's in the portfolio kind of deal. This is more for you if you're more active. You want to choose the various properties. You want to actually form the portfolio. All that kind of stuff, you're gonna have a much better time with more traditional real estate crowdfunding. So let's talk also about one of the other, I think, downsides here is if you are putting your money into one of these two opportunities, you don't have the ability to then put your money into something else. Whether it's stocks, whether it's bonds, whether it's even setting up your own real estate deal, purchasing a multifamily home, purchasing a single family home, renting it out, that kind of stuff, you're gonna have less of a degree of control over your money. At the same time, there's a lot more opportunity for diversification. When you buy a multifamily home, usually you're going to having all your eggs in one basket, if you will. Like, you do have a lot of different apartments maybe, but you're putting all your eggs in that one deal, versus with these different models, you can diversify it and spread it across many. But on the flip side, you're definitely not going to get as good of an ROI as if you had an entire multifamily home that continues to appreciate and that you continue to see strong cash flows from. Typically, the cash flows with these investments are going to be quarterly, could vary, could even be monthly, but it's usually going to be based on either the rents or if there is a liquidation event and the property has to be sold, like a fix and flip kind of opportunity. So this gives you an idea of some of the drawbacks of real estate crowdfunding and whether or not this would be a good opportunity for you. So I do think it's a good opportunity if you're more of an institutional investor and you have a pool of money and you're trying to figure out different ways to diversify that. I think I've seen, at least personally, a lot of different institutional investors become more interested in real estate crowdfunding. In addition, I think it's good if you're looking for something like a REIT, but you don't want to go with a publicly traded REIT, you want to try out this new alternative investment class, then I would look into real estate crowdfunding, because that is a great way with Fundrise's E-REIT, the Mogul REIT, etc. That's a great way to do that. And finally, if you are an accredited investor and you don't want to put your money into something like an individual property, then I think real estate crowdfunding is a good way for you to say, okay, I want to own a property, but I only want to own a little bit. Or I want to just shield my risk here. I don't want to manage the entire property. I just want to put in the money to finance the acquisition of a fix and flip or something like that. And you can also go into debt investments, kind of like, say, Lending Club, in the way you can sponsor, or you can actually provide the income, the money to provide a loan to one of these real estate developers. So you can also do that. So these are some of the benefits and drawbacks to real estate crowdfunding. I want to say one benefit here that I think kind of just doesn't go, it's not really said a lot in the industry, and it's also not something that many people recognize. So the number one benefit that I see with these types of investments are that, number one, you're far ahead on a trend. So whenever there is some kind of a trend, usually it's kind of like an S-curve. There's an adoption point at the beginning. These are the early adopters. Then there's mainstream adoption, and finally it kind of levels out, and everyone, even your grandma, knows of that trend and is a part of it. So, examples here being like computers, the internet, smartphones, etc. Usually, you want to enter a trend when it's in the beginning point, when it's still early adopters, because the most rewards are going to go to the people that initially get in on that trend. They learn the ins and outs, they learn how to make money, etc. They're going to have a massive advantage when everyone else piles in. So here's another example, Bitcoin. The people who initially invested in Bitcoin saw massive returns. They saw just disproportional ROI to the people that got in once it was mainstream and everyone knew what Bitcoin was. So that's why I think number one reason it's really powerful. Is getting a little bit of knowledge now is going to help you down the road. The second is because these investments are online, they're very easy to track. It's very easy for you to see how your portfolio is doing. It's very easy for you to track your behavior versus if you had more traditional investments in real estate. And lastly, this video is getting a bit long. I don't want to go, super long here. But lastly, I think one of the really big benefits of getting involved with real estate crowdfunding, even to a very small degree, is to begin to form connections. So meeting either networking with other investors, or networking with a property management company, or networking with property developers that have a proven track record. There's a lot to be said there, and forming these business relationships now are going to help further down the road. So that's another reason why I think it's really important, and it just gives you such a leg up too, because being a young guy, I can talk about this. I've written books on it, I've put out podcasts on it, I've written blog posts on it. But think about if you in the industry begin to master this discipline, you can start to go to conferences and more than some of the presenters out there. You can also present on these topics. You can also educate other people. You can put deals together even and begin to get to know some of the people that work at these platforms. It's just kind of like an inside track. Whereas, with some of these larger investments, you have a really big investment. It's going to be harder to network with some of these banks or people that are working there. With these platforms, it's still, I think, the early stages where you can begin to get to know the people working there. You can begin to get to know other people interested in the industry and really build up your network. So there's a lot of, I think, value in the long term. So I hope you enjoyed this YouTube video. Hope I covered some of the bases here, the drawbacks, the benefits, etc. And if you didn't think I did, be sure to leave a comment down below. I'll go more in depth into it. If I left something out that you think other people that come to this video should take into account, be sure to leave a comment down below. And in addition, if you want more videos like this, be sure to come subscribe and give me a thumbs up so that I know you enjoyed this video. Again, my name is Sal. I'll probably include a link to another video I did on real estate crowdfunding, and in particular, ways to make money in the industry, just to make it easier for you. So I hope you enjoy that video, and I will see you next time.